thank you everyone for joining us today. And we're just chatting a little bit before we got going. I've got a great group of panelists from FBN, our key analysts who really think a lot about markets, think a lot about risk and reward. And in these challenging times, we want to try and understand, what does it mean? What are we facing? Obviously the broader economic impact, but really more specifically around agriculture. What can we say today? What can we give you in terms of strategies and action plans as you face an exceptionally challenging marketing environment for your crops in the coming months? So we're going to lay that all out. I'm going to start it off and talk a little bit, and then we're going to dig deeper with our panelists, to kind of motivate this. And we were talking about this earlier before the webinar actually got kicked off, but these are unprecedented times, as we all know. No one's ever really faced this in our generation. And the question is, what does it look like when an economy shuts down? And what are the implications? You have so many small businesses, so many people unemployed. But then, of course, in agriculture, we start to think about, well, if consumers are not driving, they're not commuting to work, they're not going on vacation, they're not doing the usual things they do, the most obvious thing that sort of plays into that is the impact on driving and therefore ethanol. So clearly, corn has kind of been in the hot zone for downgrading in terms of price action because of the direct hit on ethanol. Now, we've been sort of tracking some unique data around this to try and get a handle on what does the shutdown in the consumer base look like. And to do that, we've actually tapped into cell phone data that is now sort of being made publicly available because of the issues around coronavirus. Obviously, mobility has broader implications for understanding spread of coronavirus, but we as economists and analysts want to know how much are consumers moving, because that probably directly translates into gas consumption. So we've been tracking mobility. We have data going all the way back to the start of the year, sort of forming a baseline, and we've been able to track this week by week and all over across the U.S. and just say how much are the U.S. how much is the U.S. population downgrading their movement versus where they were prior to the coronavirus. And this map is kind of illustrative of huge divergences in mobility. So this is all relative to some baseline before the coronavirus. So where you see dark reds, California, the western part of the US, those are areas where we see mobility that is slashed by 80% over what they were before coronavirus. And then you get kind of more to the southeast and areas that are a little more rural. You see some shades of red, but you certainly don't see the graduated levels that we see in kind of the urban areas. And so when we add that all up, it's fairly sizable. Now, this map, as you'll see on here, is from April 6th, and we've been tracking this week by week as this coronavirus has been unfolding. And what's interesting is the actual numbers improved in the last week. So if I can go to the next slide, I'm going to show you when you add all these numbers up, here's kind of the change in mobility. And again, if we go back to January, February as our baseline, you can see early March, no real change. Obviously, we weren't in the throes of coronavirus. March 9th, again, 0. But now we're starting to see the impact of coronavirus, down 22% in terms of mobility, 48%, 50%. But what is interesting is it's actually turning higher this last week. And that's, maybe for farmers, maybe that's positive because it's actually a sign that maybe consumers are moving a little more, they're driving a little more. Maybe not so good for our healthcare and what we're trying to accomplish with shelter in place, but it's an interesting statistic. So, just to ballpark, what does it mean if we lose, half of our ethanol consumption in a given week? Well, that's roughly 100 million bushels a week that we grind to produce ethanol. So if you think about, consumers are cutting their mobility, their driving down by half, then obviously we're losing 50 million bushels a week, just as a round ballpark number. So I think the good news for me, as I looked at this data this week, it's like, even though the shelter-in-place orders are still in effect, everyone's supposed to be doing what they're doing, which is staying home, we're actually seeing them not. So again, health policy may not be so good, but economics might be more favorable here. So these are numbers we track. We're trying to interpolate what that means for ethanol and corn markets in particular. And we're going to dive deeper into a lot of these issues, but I just wanted to share that with you. I want to start by just kind of getting warmed up with our panelists here. We have a great group. Rejeana, I'm going to start with you. You focus a lot on the demand side of the balance sheet. And so, we've talked about ethanol, but how does coronavirus impact kind of the demand for farm and food products? What's your take on that?
Yeah, sure. Good afternoon, everyone. Kevin, you did talk a lot about the clear impact coronavirus has had on ethanol, but of course there are some other commodities that have been impacted, although I think the impacts are going to be short-lived or short-term. Consumer demand, I do not believe, will have a long-term disruption due to this coronavirus. I mean, at the end of the day, we're still all eating. I don't believe that we are consuming a significantly less amount of food, that's something that to take into consideration when thinking about the long-term impacts of this coronavirus and the shutdown. We did see some pops in wheat futures, so there were some short-term impacts. We saw some panic buying on the wheat side. This helped drive up futures a few weeks ago. There were countries that were opting for export restrictions or limits, and we even saw some countries who typically buy a lot of wheat change those habits. And more recently, we're seeing some issues on the livestock side, on the disruption of the supply chain there. And that's also hurt live cattle and live hog prices. But I just want to encourage listeners or to remind all of you that in our opinion, coronavirus does not have a real long-term impact on food demand. So again, it was a short-term positive thing that we saw for wheat. Right now we're in kind of a negative situation for some of your livestock industries. And again, we do think these are going to be short-lived.
Great, thanks. And Rejeana, one of the things you track is kind of long run. As you said, this is going to be a short run disruptor, but long run, there's kind of a different tale of two demand curves here, if you will, for crops that our farmers care about.
Yeah, sure. We can touch on this slide. One of the key things here that is important, and this was shown at Farmer to Farmer for those of you that attended, the global demand picture over the past 30 years for corn and soybeans has been a substantial increase in consumption trends, whereas for wheat and rice, the increase has been not nearly as strong. And this is just another thing to underscore where for wheat particularly, even though we did see that short bump up in kind of a panic buying situation, long term, we don't think this is going to be a great impact, positive or negative, to futures. Wheat consumption, it hasn't flat-tailed, but certainly hasn't seen the same strength that corn and soybeans have. But on the flip side of that, Kevin, as you said, this ethanol situation we're in, or the declines that we're seeing in production, that could hurt global corn consumption this year, at least particularly in the U.S. We may not get that same growth that we had been seeing.
Right. Thanks, Rejeana. And let me pick Cy's brain. Cy Monley is head of our brokerage group. He's got a wealth of experience in hedge funds and trading. And Cy really, I like talking to Cy because he thinks about things in terms of probabilities and what's the chance. And Cy, this is one of those black swan events. We hear financial gurus talk about black swan events. You never expect them to happen, but just, out of nowhere they happen. This is a black swan event. How do you quantify that? How do you strategize around that as a trader and from a farmer's perspective of how they manage?
Sure. Thanks, Kevin. Yeah, I've spent my entire career in the grain markets and thinking about this stuff, Kevin. And at one point, I had a grain fund, and I look at the parallels, the similarities in managing other people's money and trying to be a good farm marketer, right? You want to succeed. There's emotion in there. You're trying to outperform the market, your farm. And it's hard, right? It's extremely hard. And I look at this, Kevin, and I come back to two very important things. The most important thing, I think, in grain marketing is a process. Your process, whatever it is, if it's making cash sales, if it's using futures and options, if it's hiring one of our advisors, have a process you can analyze at the end of the year. Okay, don't look at, I sold corn and and it went to 450. Well, that single moment, that's okay, because it's part of the process. Don't get emotional. I couldn't, when I was in the hedge fund world, I couldn't think of a good or bad trade. It's part of the process. I'm trying to make 10%. The second thing I look at, Kevin, is your data for your farm, right? What is your data that's going to, what's success for your farm? Is it $50 an acre? Is it breaking even this year? Whatever success, whatever's data is important to your farm goes into your process. You got to analyze that, right? You got to have your own set of what's important to you. So, you know, at FBN, we're constantly doing that, right? We think in probabilities. We go through a process and we say, okay, fundamentally, here's the markets. We're trying to give advice to farmers. We're trying to take action items. We now got to take what's our data and what's our process. And we're constantly thinking of that, right? We're not worried if we sell corn at 4 and it goes to 420. That's not what you should be looking at. So it's interesting you say, you know, probabilities, because we have this conversation all the time. And I had a conversation with my hedge fund buddies last year, and we're sitting here, corn's at 450. And I go to them and I ask them, I said, okay, guys, smartest guys in the room, right? These are all smart hedge fund guys. And I said, okay, what's the probability corn touches 5, right? We're all bullish, okay? I get all of them. I get all the answers back, 90%. They all looked at this and said, we're going above 5, we're going to 6. It's a 90%. Some of them said 100%. Half of them said 100%. They all mostly said 70 or 80. So I look at that, and it's hard, right? There's no absolutes. Well, death and taxes, but now you don't have to pay your taxes. So maybe that joke's gone too. But the thing about probabilities is we're thinking about that all the time, right? This panel, we go through, okay, what is, you know, Rejeana, we talked about wheat. With Ryan, we talked about, you know, probabilities of the market going up and down. And so here, Tate, I want to cue a question to our farmers, okay? I'm going to ask you, what do you think? What do you think the chances are that corn will be above or at $4 at harvest? Okay, so there you see different answers. 0 to 25%, so slim to none. 26 to 50, glimmer of hope. 51 to 75, yeah, it's possible, maybe 50-50. Or we can always dream. You know, so you go in there, the farmers, click one. I want to see what you think, right? Then what we're going to do is I'm going to show you what the market thinks once we get this answer.
Right, and I think a good point in this is it's not the way you answer this is not what do you hope happens. It's what do you realistic and objectively think happens, and that's the
grab
challenge.
Your gut, yeah. Grab your gut,
challenge.
Hit it.
Exactly. That's the challenge in crop marketing is, you know, removing the emotion from what is reality, and I think that's why, as you said, Si, a disciplined approach. Disciplined and objective approach is crucial. So while you guys are answering that, I'm going to pick Ryan's brain. Ryan heads up our crop marketing group in Canada and does a great job with just a wide swath of commodities. I mean, I think, Ryan, you guys work with 18 different crops up there. Everything's always moving, and some are good and some are bad, and it changes week to week. I mean, what's coronavirus doing in Canada, and how's that influencing crop marketing there?
Yeah, thanks, Kev, and good afternoon, everybody. So I've got a pretty Canadian answer for you off the start here, and that's the malt barley industry. So COVID-19 happens, and in Canada, they close all the restaurants and bars. And we really enjoy our craft beer here up in Canada. So beer consumption drops by somewhere between 25 and 50%. All right, so from there, we see the maltsters, so our domestic malt houses, they start reducing the amount of loads they're going to take on a given week. And at this time, they're down to about 50%, running about half capacity right now. So what's happened here is these maltsters have gone to growers and said, you know what, whatever's in your bins today, you're going to have to store that for us into the later part of 2020 and potentially into 2021. So right away, old crop malt barley prices disappeared overnight. New crop malt barley, we're relying on the export program now to get any decent price action. And we have growers that were told even today that they will not be moving their new crop malt, so the 2020 malt crop, until spring of 2021. So it just caused a whole ripple effect from them, from the government shutting down restaurants and bars, and just put a whole whole bunch of issues in our malt industry here. So that's kind of the big negative that occurred right away. We did have some positives. I think Rejeana touched on wheat prices had a little bit of a pop. So we did see that in Canada as well. Durum prices climbing as well with additional pasta demand. Even pulses have increased in price as well with some additional demand there in that market. Feed barley, we have our animals, our cattle, we can't move them into facilities, into those facilities, packing facilities, because of COVID-19. So feed barley prices have climbed up a little bit because those animals are staying in the feedlot. So, malt barley is definitely the big negative that we saw right away, but there were a few positives as well.
Gotcha. Thank you, Ryan. Ryan, on the topic of like pulses and lentils and things, I mean, India has always been kind of the king player for market potential for those crops. And do you think the coronavirus kind of changes their restrictive nature, tariffs and closed borders? Because that's obviously been a hammer on the pulse market.
Yeah, I would certainly hope so. We are seeing strength. We're seeing additional demand into Turkey. We're seeing additional demand into China as well. I would think that India is looking at this and contemplating. I don't quote me on this, but I think there were some changes even today with green peas, maybe some additional restrictions on some tariffs there in green peas, but I didn't get to review it in great detail. So I would expect to see that they're going to want to own some pulses here from Canada as well with all this.
Okay, great. Thank you, Ryan. Hey, Cy, looks like you got your answer. Can you see it on the screen?
Yeah, here it is. All right, pretty good. 53% of you said 0 to 25, 39 said 26 to 50, 7% said 51 to 75%, and one person said 76 to 100. So that person's bullish. I give you credit. So I'm going to show the next slide and show you what the market thinks. Okay. When you look at a distribution of options, and I won't go terribly into it, but the options market, CME, has a distribution of probabilities essentially. And the options market, or the market, is pricing a 16% chance. Okay, 16% chance that at harvest, or when this goes out, these options go off the board, essentially November 22nd, we're about $4. Okay, so right or wrong, it's a distribution of probabilities. All right, and that's what we got to think of. And so what I want to do is, Kevin, is toss it back to you, is, are we different than the market? Right? What's our process? What is our process to look at fundamentals, option pricing, and saying, okay, how are we going to give our FBN farmer a success story, right? How can we then deliver that? So what are you looking at the markets?
Yeah, I love this chart side because it shows what does the market think. And so back to the poll, what did everyone on this webinar think? But the market has an opinion, and that opinion is registered in options markets, and we can actually look at it. Now, Do you agree with that? If you don't, then maybe you should be taking action. If you think 16% chance is too high, then you should be talking to Cy after this and telling how to, figuring out how to capitalize on that. But from a analytical standpoint, what we at FBN do is we think about fundamentals, we think about probabilities, and one of the things we look at is balance sheets. Just like many analysts do, they look at supply and demand, and we try to put probabilities on those things. And I'll give you an example. We know USDA printed a 97 million acre corn number in March. And you could just kind of hear the minute that dropped, that farmers were collectively saying, "Oh, no way, that's going to happen." Right, Cy?
Right.
I mean, that's what
I still think that. Right. I think that's a little high, but
and everyone thought, "No way, that's going to happen." And I think those are the same people that last year said, "We'll never get all the corn acres planted" when it was pouring rain. But my point is that we look back historically at data and say, okay, how likely is it that USDA changes their final numbers compared to March? And what we see is, yeah, I mean, they change them, but is it a big number? Well, not really. In the last 25 years, the biggest percentage change down from that March number is only 3.3%. That was last year because of weather. So, for the guys out there that want to say, hey, 97's crazy because corn prices have fallen a lot, I don't think we're going to see, theoretically 93 million.
Well, Kevin, if we hang around here, if we hang around 440 corn and, beans where they're at, don't you think farmers will shift to acres? Or, I mean, I hear stories of bankers, saying, hey, you're not planting this year. The liquidity's tighten up. Don't you think some of these acres might come out?
Right. Well, that's a good point. We actually looked at the data. And so we've seen, let me give you a couple of circumstances. We've seen prices actually fall more in a month time period between that survey and this time period. We saw them fall 15% in 1 year, and we didn't see acreage move, but about 1%. We've also seen, we measured futures prices relative to cost of production. This is just a baseline we get from USDA ZRS. And this year is clearly worse. It's the worst we've had in 25 years, but it's not as bad as, or it's not, greatly worse than, say, the other year. Just as an example, we're basically, according to the math, 10% off of cost of production. And again, these are just artificial baseline numbers from USDA. And that, again, is the worst in 10 years, but the previous worst was only 7% down. So again, I have a hard time, buying into the notion that because the market has fallen a lot, because it's below cost of production, that farmers are not going to plant it.
Right.
We just don't have the data to support it. We haven't seen it in 25 years.
And Rejeana, you still think the demand is there, don't? I mean, what do you think of demand?
Yeah,
what do you think
absolutely.
on the demand side?
Yeah. For wheat anyway, I mean, sure, we saw a short-term pop, but what does that mean? It's a storable commodity. So if these countries are buying, or even if consumers are buying flour, it stays in your pantry or it stays in the bins for a while. So we're not going to feel, any wheat that's probably purchased today is less that's going to be purchased 3 to 6 months from now when things cool off.
Right. And you feel the same way, Ryan?
Yeah, I agree with Rejeana's point here with the short-term gain here that we saw with demand. Nothing else has really changed though. And, in fact, I did have a conversation with a flour mill here last night, and with all the losses they're seeing in the restaurant business right now, they said net result would be less demand domestically, and that's just one flour mill in Western Canada, so it's not the big picture. But at the end of the day, I still look at the wheat picture. I look at global stocks. That's a big, ugly number. We're not bullish. Corn. Today, that's not a great number right now either. On the canola side, though, we're seeing a little bit more demand. We have really good crush going on, so maybe there's a bit of light there on the canola side, but and pulses, but not seeing a lot on the wheat.
Gotcha. Rejeana, back to wheat. I mean, we got a shot of cold air in Kansas over the weekend. I mean, do you think that had any impact on supply? Could that really take the crop down?
Yeah, that's a good question. We did have some pretty cold temps there, and the bottom line is yes, there was some damage. Maybe we lost 5 to 8 million bushels. So localized, there could be some minor opportunities moving forward, but it doesn't change the bottom line of hard red winter wheat supplies when we look at the balance sheet as a whole. So it's just, it's not enough to get us out of this price environment. But at the end of the day, hard red winter stocks are moving lower this year again, and we think they'll move again, lower again into next year. So that's a positive.
Gotcha. Hey, Si, I want to circle back to this chart. Someone asked a really good question, and I'll rephrase the question. Does this chart also mean there is I guess it'd be 84% chance that corn is under $3? I guess I'm reading.
Yeah, it's above. It's 80% chance we're above. So there's a 20% chance we're below. So this is close. This is the percent chance we're above these prices. That's what all these numbers mean as the options go off.
Gotcha. Good question. So back to our discussion about how do we approach fundamentals. The other way we look at it is really trying to put a spin on where do we think the balance sheet will go in the coming year. So we have 97 million acre for corn. With normal yields, we expect carry out to be increasing. And of course, the broader market does too. So we've looked at historically what happens to corn prices on a seasonal basis when you have stocks that are growing from year to year, like we expect them to do this year, and what happens when they're shrinking from year to year. So these are charts that illustrate those two dichotomies. On the right, you have big stock increases going from new crop or going from old crop to new crop. The zero line is basically, the price at planting time in March. And you can see if we get above that, that means it's stronger. If we get below it, it's weaker. And, so what I'm trying to illustrate here is in years when you have big stock increases like you do on the right, we tend to see very little selling opportunities. In other words, summer rallies are muted and few and far between, and that by harvest, prices are usually down on average about 10%. I mean, probabilities aside, how does a farmer take this and make it work?
Yeah, now we can do action, right? Now you got to step into action. You go back to your plan, and 50% of you don't think you're going above 4. So you got to have cash sales lower than you want, right? You're going to have a plan. So if you're looking at 350 and you're thinking, well, I'm not making much money, it might just be a survival mode, right? It might just be a plan where we've got to look at $3.50 to $4 as $4 is 16% chance of being above there. You got to start taking some action now. I mean, right, Kevin? Wouldn't you guys agree that you got to be forward thinking? If you're only 20% hedged, son of a gun, you got to get to 40, right? You got to take some action here. Don't just wait, because it can go to 3, right? Kevin, what's your probability? Do you think corn touches $3? These corn touches
$3. My probability is pretty darn high. So I would be in the camp that has a very low probability, like less than 5%, that we touch $4. And the reason I say that is because I get, without too much work, with a 97 million acre number and a yield that is normal, I can get to a 3 billion bushel carryout. And under a 3 billion bushel carryout, I got a reasonably good shot at seeing futures prices that are low $3. Let's call them 310-ish. And what does it take for me to get a balance sheet that gets us to $4? It takes really slim odds for acres to be sharply lower, and it takes another coin flip, that is weather being really bad and dry and causing yield to be off sharply. So I need two independent, as statisticians would say, independent events that are highly improbable to line up to get me to $4. So that's what has me concerned.
So you're less than 10%. So you look at it. So you have a higher probability of corn going to 3 than 4.
Right.
The action item, right? So if we're going to be a good marketer, the action item should protect, right? So look for ways to add some sales up here quickly. You get some rallies. You get a spring rally and you rally 20 cents, Kevin. So let's say we go from 350 to 370, right? What would you be thinking? Stepping it up.
I'd be thinking selling a lot. Unless, and the only reason I couch that is unless things dramatically change. What needs to dramatically change? The weather needs to dramatically change. And just as a side note, the 12 of the last 13 years have been above average precipitation. We have had one drought in the last 13 years.
Does basis go pretty wide, or do we see any demand? Right, basis probably stays wide.
Rejeana, I'll hit you up on basis. You've been doing some basis modeling stuff. What do you got in store for what you think basis looks like for 2020 at harvest?
Yeah, sure. There's better news for soybeans than there is for corn. Just looking at corn and new crop pricing opportunities, doesn't look good. It looks worse than it is today. Declining value situation. And then for soybeans, while there is some bright side, it's not substantial. We'll write about that in this weekend's report, but a little bit of upside there. But I really want to caution producers who are in Iowa and Nebraska. That's where ethanol has been hit pretty hard as far as production goes, and those are two states that produce a lot of corn. So we are not very optimistic about basis opportunities there moving forward.
Yeah, I think those states in particular, if you're a farmer that has to find a home for those bushels off the combine, you don't have storage, you're delivering it locally, it may be worth locking in basis. We don't say that very often. We have a lot of data to suggest it seldom pays to lock in basis early, but this is probably one of those years, especially in Iowa and Nebraska, where it may be a good strategy. I want to pivot a little bit. Let's talk about strategies, and we've kind of been dancing around these strategies to thrive. And I guess the question I'll ask my panelists: can a farmer thrive in this environment, or is it really about survival? And if so, what are your takeaways? What do they need to be thinking about 2020? Ryan, let me start with you.
Yeah, you bet. Thanks, Kev. There are opportunities to thrive up in Canada right now. I want our growers, though, to stay disciplined. And I know it's cliched, but stay disciplined. When you see profit, take that profit. Have a plan. Write down a marketing plan. Create a plan. Know your numbers. It's basic stuff, but know your cost of production. Margins are tight in Western Canada. Margins are tight. Cash flow is tight. So when you have the chance, take profits. We've got opportunities in pulses to grab profits. We've got, and we will have additional opportunities in canola. We've had some great pricing opportunities for wheat. Take the margin when it's there, and you can thrive in Canada in 2020.
Great, thank you, Ryan. Rejeana, how about you? Thrive or survive? What's the strategy?
I think for wheat producers, there could be some thriving situations here, particularly on the soft red winter wheat side and Durham for that matter. But I think for corn, it's going to be more of a survive mode where just kind of agreeing with Ryan that we really have to be careful. You need to know your market and you need to take advantage when you can.
Great. Thank you, Rejeana. Sai, back to you. Thrive
yeah, I'm in a different mode here where I'm using futures and options to protect, so not just cash sales. There's some things you can do in the futures and options markets, looking at spreads, but it is a survive mode. And the other thing I look at is if you planted a lot of corn last year and you're wet, look at going to plant some bean acres. Okay, the bean acres are the beans have the potential to rally, I think, 20%. Right, the balance sheet for beans is a little tighter. So I would say look at your numbers, like Ryan's saying, and if you can pivot, if you've got some rotation, you went corn on corn last couple of years, move same acres over to beans, right? That's where you can have some upside that might give you some chances this year. Right. And the other thing is the reason I say survive, because I am in the opinion we're still a little deflationary, so you got to be careful, right? You got this economy on top of us. We don't know the outcomes. It's not time to be a hero. I think that the hero comes in a couple of years when we start to see inflation, right? That's when I think the farmer, I want to be a farmer in a year or two, right? Because I think we go through an inflationary period. So just grab on this year, do what you can. I do think it gets better.
What about you, Kevin? Thrive or survive?
I'm going to take survive with a bit of a twist, and that is focus on ROI. Every line item on your farm budget, every input you put in the ground or you buy needs to be evaluated from an ROI standpoint. Is it going to make you money? A lot of times we just go out there and try and grow yield, maximize yield, but man, this is such the year that you got to focus on ROI. Every dollar is going to count. Every dollar should have a big bang potential. And so I think our colleagues at FBN who are working in seed and working in chemical, man, they've got some really powerful offerings to help on the ROI side. That's really what those business units have been based on. So I realize this sounds like a somewhat of a plug, but I'm genuine about it. I think FBN is really doing serious things to help on the ROI side. So man, this is the year to do it. Every input counts. Every dollar counts. Let's, do we have any questions from the audience? I think we're getting close to time, so I want to make sure we got some questions. We answered some earlier. Tate, do you have any questions for us?
We've actually had a lot of really good questions come in. So everyone, thanks for throwing those questions in the chat. And I guess we'll start with this one, Kevin. What are you guys' thoughts on meats? Things are getting worse day by day with the plant shut down and such. What is the advice for someone who has cattle ready at this time? Right.
Definitely a challenging question. And, livestock is obviously one of those commodities that is not really storable. I mean, it has to move to market. Animals get to get to maturity. They got to be moving through the system. And now, as the system grinds to a halt, the market is forcing you to see serious price consequences. So my advice to you is just try and figure out how you can get through this as best you can. What I would say is long term, the demand for protein is there. There is going to be just really strong demand to fill the backlog of lost livestock or lost hogs in China, and so I think we're going to, as a globe, as a world, going to need to produce more and more protein. So it's a short run phenomenon, and that's not to say it's not going to last and be painful for a couple months, but longer term, man, it's going to be to the upside. Rejeana, I mean, you've been following China there, and what's your take on it?
Yeah, sure. China's been a great buyer of a lot of proteins right now as they continue to deal with ASF. Brazil's been a key beneficiary there, but the U.S. and Canada also have benefited from that. But something I want to underscore is that China is starting to rebuild its herd. They still are reporting ASF cases, but they've reported several consecutive months of increases in sow numbers, and they're also recently reported some increases in piglets. So, they are working on rebuilding it, but there will still be opportunities in the next several months, at least on sending some more of our protein over to China.
Mm-hmm. Great, thanks. Ryan, I see a question targeted towards you. Edible beans in the U.S., I'm not sure if you have expertise in that, but you're the best candidate on our group to talk about the edible bean market in general, and maybe you have some insights about U.S. markets.
Yeah, actually, I was looking at that question, and I think we work with like 23 or 24 different crops up here, but edible beans is not on our radar right now, so I'm going to have to defer and come back to
What about canola, Ryan? You got an opinion on canola?
Oh, every day, you betcha.
Yeah. Will you give us your thoughts there?
Yeah, with canola, we're seeing, exports are tracking very similar to last year. We are seeing crush at a record clip as well. We're seeing less acres in the planting intentions for 2020. It's tightening up, and we just need China to come in and be a little more aggressive with us here in 2020 and 2021. But we're slightly optimistic right now. We're slightly bullish. We still advise our growers. We are 35% sold today on new crop, and when November futures touch 490 to 495, we'd be happy to sell a little more at that value. $500 futures are key for canola in Canada, so that's $11 a bushel, profitable, and that's what we're looking for.
Ryan,
Kevin, I'm gonna.
Oh, go ahead.
Rejeana, what's your thoughts on wheat? Where would you sell wheat? So Kevin and I agreed corn we're selling. We're going to open the upside on beans. Where would you be selling wheat?
Sure. For Kansas City, I think $5 on the board is always a good sale. I think it's going to be hard to hit that anytime soon for new crop, but that's always a good one to lock in. If you can't lock in $4.75, I think is a good bet too. For Chicago, you want to add about 75 cents to that. I think Chicago's going to remain at a premium to Kansas City, and I think that we maybe have booked some at $6 a bushel for 2021 crop. So be looking out for that board. I think there'll be some more pricing opportunities for that crop, which will be planted in just a few months. Not as optimistic for Minneapolis. We've got a lot of hard, high protein stocks between North America, and I think getting, $5.75, $6 a bushel will be good for Minneapolis at this point. I'm a firm believer that Chicago is going to remain at a premium to both of the hard wheat boards this season.
Great. Thanks, Rejeana. So let's do some brainstorming on beans.
Sure.
We haven't talked much about it, but I think we're more friendly beans. And so, what is your take on beans? And I'll tell you mine.
It's the opposite of last year, right? Where we had the China problems, and it made sense to grow beans this year. You got too much corn, or last year you had too much corn. Now I think it's the opposite. Balance sheets tighten. China's still in the market to buy beans. If there's an issue, let's say China and the U.S. kiss and really do make up, and they do come and buy our products, it's probably going to be soybeans more. Ethanol is on the table. That's could help the corn market, but the bean market's the one that has a chance to go up to 10.50. Some weather problems, balance sheet isn't as tight. So if I'm selling corn up to $4, right, I want to open up my upside in beans, right? Like I was saying, I'd switch makers. That's where I think you could have some potential this year. How about you, Kevin? What do you think?
I agree with that. I mean, the balance sheet is moving in the right direction. I mean, go back year and a half, 2 years ago when we were in the heart of the trade war, and the balance sheet was ugly. 900 million bushel carry out. Now, with acres being down, long run, demand is picking back up again. Soy crush is just through the roof. It's getting closer to 300 million bushels. Is that a big catalyst? No, but it's moving in the right direction. I'll call it tight-ish. It is getting better, and so I would agree with you directionally that under $9 beans where we're at today on the board, I think is not a point I want to be selling, and I'm not worried about that being a long run price in this framework. I think the directional trade is to the upside here.
Yeah, so the risk is more to the upside, and the opposite in corn, the risk is more to and you can see these two commodities have a big divergence, right? So you can see, 330 corn and 1050 beans. There's no reason you can't. So
absolutely. It's only it's only an acreage thing, right? I mean, the market doesn't care what they trade at. So
right, exactly.
Kevin, we kind of have a good clarifying question there too on that topic. You mentioned a 20% rebound in soybeans. Is that new crop or old crop?
Right. I think that's probably more new crop. I mean, we're stuck in the quagmire here around all the coronavirus stuff. So I don't think anything old crop has a lot of upside, corn and beans. I mean, not saying it won't happen, but when we talk about, balance sheets tightening for beans, that's really kind of a 2020 and beyond type of scenario that we think we see the catalyst. Just to frame it in perspective, last year at harvest for beans, the carryout was roughly, 450, 500 million bushels at the time from USDA. And, November futures were 9.25. But now we're 875 with probably an expected carryout. We don't have an official number from USDA yet, but it's probably low 300s. So, South America's had a reasonably good crop. It's probably going to be, pretty good, although it's coming down a little bit. But I just think directionally it's, the market's kind of beating it down because of the coronavirus.
Let's see here. We have a couple more. So we probably have time for one or two more. I guess we'll go with this one. Understanding corn demand for ethanol is down, but won't there need to be a soybean meal and corn demand increase given the lack of DDGs in the livestock industry?
Yeah, really, really good point. I mean, obviously there's a substitution that happens, and generally speaking, I think about it as for every 100 million bushels of corn use for ethanol that we lose, that will gain about 25 million bushels of corn demand from feed. And then, of course, you've got the meal replacement going on. So you're exactly right. There's going to be some substituting going on at the levels that we haven't seen before because we've never had ethanol curtailed back. I mean, my numbers for ethanol are probably we'll probably lose 400 million bushels of corn use over the next couple months when this is all said and done, assuming it's all said and done in a couple months. And that probably means, we'll gain 100 million bushels on corn use and, increase soy meal as well. And so again, soy meal, I think, could be a darling, right?
Oh yeah, that's the canary in the coal mine is the soy meal demand, and that can take beans up. So you got to watch the meal, and the assumption is that China's coming for that, right? That's part of the assumption demand curves is China's going to come back. And they'll come back for beans or crushed for meal. And right. And to Rejeana's point and Ryan's point, eventually it's a short-term demand. We're talking about 3 months, 2 months. Then it comes back to normal and the demand will pick back up. And the other thing is crude. You look at crude and some of these commodities, I just think we've got a lot of bare stuff, but the ethanol part doesn't really come back. So that's the hard part for corn, right? Is it'll come back later, but I think you've crushed the corn market a little bit here for the foreseeable future, unless you get the weather scare.
Right. So let me ask you a question. You mentioned crude oil and ethanol, and we hadn't touched much on crude. Long run, I mean, obviously crude's down at $19, $20 a barrel. Long run, the crude futures market shows it rebounding to $45 a barrel.
Yeah.
On the ethanol side, and ethanol futures I get are not highly liquid, so I'm not sure how much stock I put in them. But long run ethanol futures right now are saying we're only going to get to $1 a gallon.
Right.
I don't see how anything survives at $1 a gallon on ethanol.
Right.
Farmers can't grow corn at that corn equivalent price, and ethanol can't be used. So, I mean, how does this play out? Do you think the market's inefficient, underpriced here for ethanol long term? I'm not saying today it shouldn't be where it's at, but I mean, where do you think ethanol sort of needs to trade long term?
Well, that's exactly right. I think it is a function of, it's correlation to crude and it's correlation to corn. So I look at this and I think the markets are efficient. They're also a futures market, right? So if we're talking about it, so is the futures market. So are other people. So I think what happens is you get change, right? You're going to have some change. You're going to have something change in the supply and demand side, where whether it's less acres, you get less corn acres, you get globally less corn acres. The soybeans rally, grab acres, for the next year or two from that, or the crude market can do something where the Saudis, we just did 9.5 million barrels. They come back to the table again. Global economies are down. I think you can see one shot across the bow for war, it changes like this, right? So you got to be careful in terms of the crude market. I get it. It's bearish here. You go back to ethanol. It's bearish short term, but I don't want to be short crude at $20, and I wouldn't want to be short ethanol at $1.
Right.
For very long.
I mean, Rejeana, you talked about the long-term trends of corn, soy, wheat, rice. Do you think that's the trend of the future? We can extrapolate those out. I mean, what do you kind of think about in terms of food demand and where we go in the next, and I realize 5-10 years seems a long way away in the time we're in. Any thoughts
Sure.
on that?
Yeah. Well, I just, again, want to reiterate that what we're seeing now with COVID-19, in my opinion, are short-term effects, that these are not going to create long-term issues. Long-term, though, I think we're going to see more of a continuation of what we have been seeing, in that corn and bean consumption will continue to increase at a rate higher than wheat and rice, simply because we continue to shift to more protein-sourced food items, more meat in our diet, and I think that trend will continue. Now, on the flip side, you go, okay, well, we've got this drop in ethanol, perhaps also biodiesel, given the stay in at home, and we've got cheap crude. What does that do to the use side of the balance sheet on the fuel, for corn and beans? And so, Kevin, you may have an opinion on that, but just from a food perspective, indirect and direct consumption on the four big ones, I don't see us breaking out of this, corn and beans growing at a higher rate than wheat and rice in the next 5 years.
Right. So it's really, the story going forward continues to be, the demand for protein.
I think so.
Animal protein especially. So excellent. Tate, any other questions you can see that are?
One more. Will the general economy be a depression or super big inflation? I want to give a little positive spin here. I think short term, just an opinion again, right? I look at risk, reward, and bets, and I got out of my stock market positions the last 48 hours. So I'm going to preface that. I do think what's going to happen is we're in a deflationary time, short term. I think it's going to be really hard for the stock market to stay up here. Kevin and I were talking about this before the panel got on. It just doesn't make a lot of sense. I think you have a lot of people that look at the bailout and let's get back in the stock market, V-bottom, all that stuff. Kevin and I probably disagree, or agree that we disagree with what the market's doing. And it's going to take some time, right? It's going to take some time to figure out how bad these numbers are. We're just going to get into earnings season. It's going to be brutal. Unemployment probably gets to 25%, right? Keeps going up. Then I think what you got to think about is after that. Okay, I think the farmer's going to be in a very interesting time if we can get out of that deflationary period. You do have inflation, right? You just printed all this money. It's going to be the velocity of money. Do we get back and chase it? That's going to be the important part. Is it once we get the economy back running in 6 months, and I don't think it's in a month, you get the economy back running, then you're going to see that inflationary time, and that's when it's going to be good for farmer. And that's why I think the dollar comes back down. We do some exports. So that's why I say this year, hold on, because I think you got some really good years in the next, 2 to 3 years after that. I think it's going to be very interesting to be a farmer.
Right. And I would agree. And I think, I think the interesting thing will be what happens with the U.S. dollar. We also touched on that earlier, but, the U.S. dollar has been such a struggle for U.S. farmers because it's been so strong. And, does that potentially change that pivot in the next few months or year or so as we go forward? Folks, this has been a great roundtable. I want to first of all thank all of my panelists for joining us. They provided great insights and a lot of good commentary. Before we leave, just to remind you, we have all of these panelists as part of our FBN Market Advisory program. Our team of crop marketing advisors are scattered across the U.S. and Canada, work with farmers every day around these challenging crop marketing issues. And, I'll go back to what our thesis is, which is discipline, and objective analysis. So that's what you get as part of FBN Market Advisory. You get discipline and you get unbiased, objective analytics in making those decisions. So, by all means, check us out online. We have a link to that advisory program that you can see here and go to. And I thank everyone for joining us. The last thing I need to do is make sure my compliance officer is happy, and I read my compliance statement, and I'll let you guys go. Risk disclosure. The risk of trading futures and options can be substantial and may not be suitable for all investors. All information, publications, and reports, including this specific material, shall not be construed as a solicitation. Thank you so much, everyone. And if you have any follow-up questions, please hit us up on chat. Thanks for joining us.